Mr. Chairman, ladies and gentlemen, I'd like to thank you for, I think, such an inspirational introduction. Each of us, as you know, are bound very much by the limits of our own imagination. And the success of DP Wold and Dubai shows that imagination, passion, hard work, tenacity can go a very, very long way. When I was 17 years old, I had this overwhelming desire to see the world. And as a young guy, full of optimism, I headed down outside of London with a sign, because I was hitchhiking, which said India. Nobody stopped to take me to India. And after a couple of hours, I changed the sign to say France. Many people were going to France, and I got my first lift. And I got to India through France. Over the course of the next 3 years, I traveled more than 80 countries. Through Iran, through Pakistan, Afghanistan, Tibet, China, the Trans-Siberian, all the way back into what was former Eastern Europe, Cold War, the Iron Curtain. I was expecting to go back home to see my mother. As you know, in those days, we didn't have telephones and internet, so I'd been gone a very long time. And opportunistically, in East Germany, whilst I was also hitchhiking, a guy came past in a car, and instead of going to England, he said he was going to Portugal. I said, let's go to Portugal. And when I got to Portugal, I carried on. I hitchhiked through the Sahara, right the way through Africa. This was the beginning of my life, and over the course of the last 25 years, I have worked with as a staff member for every major international organization. I was at the World Bank, with the British government, with the European Union, with the United Nations. So I don't consider myself to be an outsider looking in. I consider myself to be an insider looking out, but with a perspective from the outside also. I like to start with this idea of gravity. Gravity is a simple idea, this Newtonian idea of the force that drops the apple from the tree. But I want to take the concept of gravity a slightly different direction. A natural phenomenon by which all things with energy, Mr. Chairman, you are a glowing example of this, that gravitate towards each other, including stars, planets, galaxies, and light. I would say another concept of gravity is the economic center of gravity, political gravity, the ideas that allow people to come together, to share a common vision, to share the burden by working collectively. And this center of gravity is obviously what has allowed Dubai to emerge exactly where it is so far. Let me just then create a framework. Over the next 20 minutes, I want to talk through some of the major structural drivers of change globally. And there's lots of hidden stories, as you know, because what's driving history often is not governments. There are powers above governments. These also include international markets. But what's happening? Let's go back over the last 2,000 years. McKinsey, in 2012, did a very interesting piece of work. And whilst the data behind this work may not be completely watertight, actually the findings tell us something we intuitively know very well. What they did, and the data from 2,000 years ago is not very robust, they took gross domestic product for a specific country and they mapped it, not two-dimensionally, but three-dimensionally. And that gave us a center of gravity for the world economy. So I want to start by just talking through the last 2016 years that brings us to today. If you look here, 2,000 years ago, the center of gravity of the world was pretty much in Central Asia. And it stayed there for about 1,500 years. You then had the rise of the Ottoman Empire, and as a consequence, it progressively started to move west. But it took, as you can see, a very long time. It took almost 2,000 years for it to move to northwest Central Asia. And then the world started to change. The collapse of the Ottoman Empire, the partition of the Ottoman Empire, largely by the British and the French, the Enlightenment period that took hold in Europe, the industrialization of Europe. The industrialization was driven by imagination. Because all money comes from here, all power comes from here. An understanding, as you said, how to ask a question differently. 1913, around the First World War. And you can see, the end of the First World War was pretty much the decline of the British Empire, which we'll talk about in a moment. But as you can see, the rise of the American Empire on the back of the First World War, and the global economic center of gravity of the world has shifted into the transatlantic. That's about as far west as it went. By 1970 and 1980, Margaret Thatcher and Ronald Reagan came along, and they started what was the outsourcing of the industrial complex. We're capitalists, we may not be nationalists, we might be globalists. Why do we have to produce it here? Could we not outsource it to China, where the labor cost is cheaper? This is part of the decline of the West, part of this storyline. 1990, 2000, as you can see, it's heading east. 2000, the turn of this millennium, the events of 9/11 saw a monumental shift. Over a period of 10 years, you had the biggest shift in the economic center of gravity of the world. And by the current assessment, and the figures aren't very solid, but they're solid enough to be clear at this level, the center of gravity is moving east at around 140 kilometers a year. Now, I spend a lot of my time in Central Asia helping the US government and the countries in Central Asia putting together the new Silk Road. Not been very successful so far, but it will eventually be successful, because this reality is by 2025, there's a very, very compelling evidence that the economic center of the world will be in this space. And that doesn't mean that all trade flows through Central Asia, but it means that the shift in the balance of economic productivity that goes with it. How many of you know about the Shanghai Cooperation Organization, SCO? Please put your hands up if you're fairly intimately aware of SCO. The Shanghai Cooperation Organization was established pretty much after the events of 9/11. And SCO, in my view, will eventually become the NATO of the East. If you look in the early days of SCO, the early members are China, Kazakhstan, Kyrgyzstan, Russia, Tajikistan, and Uzbekistan. That's the beginning of the story. If you move forward, these are the countries which are looking to join the Shanghai Cooperation Organization. Pakistan, Afghanistan, Belarus, Iran, Mongolia, Armenia, Azerbaijan, Cambodia, Turkey, Sri Lanka, Nepal, and Egypt. Turkey is a member of NATO, but it wants to join SCO. Turkey is looking east, it's not looking west. Middle Eastern oil is going to flow east, it's not going to flow west. These are structural changes. So the economic center of gravity has shifted. It's moved east. And I was at a conference, the CFO conference in the Middle East, about 4 months ago, and I announced that the yuan, the Chinese currency, was about to be made a reserve currency of the IMF. And the 250 CFOs said, no, Peter, you're wrong. And 2 months later, they announced that, in fact, the yuan had been bought in. It had been bought in not because accountants thought it was necessary, but because history was demanding it. The shift east is unstoppable for demographic and other reasons. A significant factor, particularly when it comes to the new Silk Road in Central Asia, is the failure of critical infrastructure. On a concessionary model of 40, 50 years, where much of the trade infrastructure should be provided by the government, in many of the states where there's huge opportunities, the governments don't have the fiscal resources to be able to fund some of this critical infrastructure. These are structural gaps, which I'll come back to in a moment. You'll see where I'm going on this, so do bear with me. Economic complexity, rank of 1 to 128. By economic complexity, we talk about the ability for an economy to take primary commodities and to make things like iPhones or whatever it may well be, smartphones. The industrial capability of the West, as you can see it here, and then you get the countries which have very, very weak capability. Japan ranks the highest. Look at the structure of their economy. They can produce anything. Mauritania, the least complex economies. But over the next 100 years, this capability which exists in the West is being replicated in many of these other countries. In 100 years' time, the complexity you see in the West will be global. So for countries importing some of these products, they may not need to. They have the capability to produce them themselves. We have 7.4 billion people on the planet. There are some things that we do know. The dollar eventually will go into decline. The currency pegs that you have with the dollar eventually will need to move to another basket of currencies. The yuan as a trade and reserve currency is only just beginning its next 70 years. There are another 3.5 billion people to be born, and we know where they're going to be born. They're not going to be born in Europe. Europe has an average age of 38, and by 2050 it will have an average age of 48. There are those who are trying to stop refugees, and there's those who are saying we need refugees, we need to reinvigorate. So we know a lot. Countries by population, nothing you don't know. You can see here above this level, China, India, Brazil, the United States. Now if you map on here, these are your port operations according to your website. You can see where your current ports are located. Africa is the growth story, particularly East Africa and Central Asia, is the growth story of the next 50 years. These are countries by real GDP. By real GDP, I mean when we take account of inflation. You can see, again, the high-level growth stories are here. This area here is where the next 30, 40, 50 years belongs to. And I have a different view of the world. I don't believe that the West is collapsing, although it does have a fiscal crisis. What I see is the rest of the world is coming up. So the relative power of the West is in decline. But in fact, what you'll end up with is a highly industrial world with countries that have the capability, largely, to produce things internally. That will be a game changer on the trade side. This, for me, is a very important side. It shows levels of indebtedness. Growth in Asia is being driven by surplus money. This is the US, the most indebted country on the planet. Anybody has any idea how indebted the US is? Trillions, at least 100 trillion, perhaps 300 trillion. You take federal debt, you take corporate debt, and you take household debt. This will define history. You either go to war and you wipe off your debt, or eventually you have to service that, which is why if interest rates are pretty much at zero, it's not so easy to increase the rate on borrowing. This storyline is very, very important because this growth is being driven organically by ingenuity, by opportunity. The rise of developing economies has been the growth story of the last 15 years. But the BRICS, as you knew them, are not eventually all they appear to be, because much of this growth has been driven by debt. This is an important game changer, I think. These are the growth outcomes for 2016. India, China, Indonesia, South Korea. These are those above 5%. The reality, though, is the economic growth future of many of these countries are not higher rates of growth. They're incremental. They reflect these demographic changes, but they still provide huge opportunity. But here you can see developed markets are trying to regain the power. The West is trying to reassert itself through different means. As you know, economics is warfare. As they say, second place is the first loser. And this is what's going on in the world as we speak. Just a quick one, some of the takeaways on growth before I look at trade and the new Silk Road. As far as I can see, the golden age of growth is over, because when you end up with advanced economies, you cannot maintain 6, 7, 8, 9% growth. There may be exceptions, but they're not long-term exceptions. East Africa, India, China, Central Asia are the growth stories over the course of the next 20 or 30 years. Big cities. 70% of the world's population will live in 500 cities by 2050. That means the municipality is actually the most important form of governance. Currencies. The yuan as a reserve currency, every 69 to 71 years a new reserve currency is born. This happened last December. It was sanctioned by the IMF, and it comes into play at the end of this year, which is why if you look at the turmoil going on in China around currencies, it's based on their commitment to liberalize their currency in order for them to allow them to be a much more structured part of the fiat currency world. The dollar is hugely overvalued, eventually because of this debt issue. And the euro, which I can talk about when we get into an open discussion if you're interested. I worked with the European Union for many years. I'm very negative on the outlook of the EU for very specific reasons, which I can talk to you about if you're interested. So currency wars continue. Commodities. As you know very well, I'm not trying to tell you your business. You're far more aware of international trade than I am. It's the end of the commodity super cycle. When you put interest rates down to zero, everyone invests. So it's not really free money. It's only free money if you can turn a profit on it. And that's an issue which you'll see beginning to emerge. China's slowdown affects growth, but I'm very buoyant and very bullish on China and Central Asia. Hard to stop for geographical, historical reasons which are outlined. But I would say global growth, volatile as it may be, is in the 1% to 4% range maximum between now and the next 20, 30 years or so. There's a major divestment from oil. The Bilderberg meetings, not the last one, but the one before that, had a discussion on oil because OPEC used to dominate, and now OPEC is only 30% of production. The Rockefellers divested from oil 12 months ago. They took $50 billion out of the oil industry. The West is moving away from oil. Middle Eastern oil is going to flow east with a price tag to match. And there's $12 trillion which is being put into the climate deal itself, as you know, which is coming out of Paris. Fiscal pressures. The Western fiscal crisis is unresolvable. Austerity drives down growth. Borrowing makes the debt matrix even more complicated. Between 1996 and 2014, sea trade, as you can see, grew massively. And you have the financial crisis here, which obviously dropped off purchasing power. Land trade picked up hugely from 2003 and is pretty much leveled out. But eventually, if you can see, from a trading point of view, if you look then at volumes of trade, seaborne trade, from 1990 to 2013, this is a great trajectory. Seaborne trade is going to increase. The volume is going to increase. Inbound, land-bound trade is also going to increase, and I'll come back to that in a little moment. According to UNCTAD, 80% of world trade volume and 70% of world trade value was handled through ports. Over the next 20, 30 years, some of that will change, I think, and much more inland port-based transactions will begin to emerge. And I'll talk through that in a moment. I had many charts here, but I'm keeping this short. There's two charts which were interesting. We asked our economists to put these together. Europe and Central Asia, the main trading partners, as you can see, are still Europe and Central Asia. Europe and Central Asia is trading within itself largely, not internationally. The MENA region, on the other hand, as you can see, has a very different trade dynamic. You're a hub, a logistical hub. There's very little infrastructure that binds the regional markets of the Middle East and MENA together. Very, very different growth trajectory, as you can see. 5 to 10 year commodity lows, I think that's what we're all looking at. But the real new Silk Road goes from where to where? It goes from Shanghai to London. Shanghai to London. The rise of Eurasia, the fact that American interests in Central Asia are waning, and the infrastructure that is being built from here, again from Shanghai to London, these new trading centers, which are all land-based, is the future driver of much of commodity trade globally. There's lots of governance issues here. DP Wold can play a key role in resolving those governance issues, can play a key role in trade facilitation. And as I outline later, there's this move to what are called multinodal inland ports, which I know that you are aware of. There are the Carrick trade routes, which come down here, being funded by ADB. But there's some dynamics because of the complexity, which you'll see in a moment. SCO is enlarging, and these trends in trade, in my view, because they've established the BRIC Bank and the New Asian Infrastructure Bank, are pretty much inevitable. They have the money to fund this infrastructure. They also have the political clout to co-opt the other countries into that framework. You have Trasica, which is the northern route which comes into Europe, and you have what is called the Afghanistan Regional Economic Cooperation Conference. And China, as you know, recently, last year, they announced a $48 billion investment in CPEC, which is the China-Pakistan Economic Corridor. The Chinese have said, we don't trust Afghanistan. We'll circumvent it. We'll come through Pakistan down to Gwadar. The Chinese government wanted to go to Karachi, and the Pakistan government said, we have a problem in Balochistan. We want it to go to Gwadar because we want an economic imperative to bind Pakistan together. A fallout happened, which was not reported in the press, which is the Chinese, when they made this announcement, they didn't discuss with the Indian government. The day after the announcement, the Indian government asked for a corridor because they need to get energy from Central Asia. They asked this from Pakistan. Pakistan said no. So the corridors around Afghanistan will be the CPEC corridor down to Gwadar, and then it will be the Indian government investment through Chabahar up through the Garland Highway into Central Asia. So Chabahar will serve Central Asia, Gwadar will serve China, and Bandar Abbas will serve Europe. This is the confluence of trade hubs down into potentially the industrial capability of the Middle East, around which China will then play a considerable role in.